Hi there, you're watching Your Trades on ET Now. I am Snehisha, with me is Ankita Saxena. Let's quickly wrap up the kind of trading session that we've seen today. Nifty has managed to close above the 24,000 mark, but we're sub the 24,200, which is close to the day's highest point. But nonetheless, we've managed to end the day in the green. Let's talk about gold, because that has crossed 1 lakh rupees for 10 grams in Mumbai. And so very massive move coming in on gold prices today as well. And the entire banking and financial pack was also in focus on the back of RBI introducing the new LCR, which is a liquidity buffer rules coming in. This against digital loans. On the back of this, the entire financials pack, banks and NBFCs were in focus today. Big news of the day, 361 WAM and UBS have announced a strategic tie-up. So that was also a big story of the day, and we also interacted with the management of both of these companies as well. So Ankita, lots to talk about today. What stood out to you?
Absolutely, like you mentioned, stellar moves. In fact, the shining part of the market today was the gold, which touched its 1 lakh. Even the benchmark indices are pretty decent. We were managing to hold on to 24,100 in the Nifty. But a couple of things that couple of other things that really stood out. Let's look at the top news for the day. Besides that is the fact that RBI has reduced the liquidity buffer for digital loans. We also had that big deal come through for 361 WAM and UBS announcing their strategic partnership. We also had the management speak to ET Now in an exclusive chat. We also had the FMCG stocks that were up in a way, on the back of that UBS consumption outlook that came in. We also had the 12% safeguard duty on steel imports for 200 days. And on the back of that, we had the steel names also in focus today, and on the back of that news flow. So that was the top news for the day, largely how the day panned out. A decent day of markets coming in, continuing from yesterday's good moves. But let's get on board Vikas Jain, who's the head of research, Reliance Securities, who's now joining us. Hi Vikas, thank you so much for joining us today. Because yet another day in the markets where we have managed to hold on to this 24,000 levels, that psychological mark. In fact, we did see a whipsaw. We did see the trade to be a little bit choppy. Then we managed to regain, and we closed up pretty decent. But do you expect this up move to continue both for Nifty and Nifty Bank? What are the levels that you're working with?
Well, if you look at the structure remains positive, no doubt about it, as we have seen good amount of up move for the last 10 trading sessions. So some amount of respite or retracement cannot be ruled out. No doubt we are sustaining above the 200-day average, above the 24,050 mark. So the first amount of support remains near to 24,000, which is a round number, and plus the 200-day average. We believe with the rollover volatility, Thursday we have the Nifty expiry and simultaneously all the expiries for Fin Nifty and Bank Nifty. So volatility would be pretty high. We have closed in a doji candle in today's trading session. So tomorrow's opening would be very key. So 24,000 would be a great support area, and on the higher side 24,350, 24,400. So any retracement near to 23,850, 23,900 would be a good entry point for Nifty 50 to enter into.
Some optimistic levels to watch out for in tomorrow's trade. Vikas, hi, thanks so much for joining us. Could you also share with us the stocks that you are liking right now? Where are you seeing pockets of value?
In terms of the structure, Bharat Forge looks pretty attractive because if you look at the stock has witnessed some amount of volatility with respect to tariff war, and we saw a strong amount of sell-off, but it has again recouped and bounced back above and trading firmly above the short-term and the medium-term averages. So we believe Bharat Forge can be look attractive from current levels. It is poised for a vertical up move. So the stock can be bought with a stop of around 1065 and a target of 1185. And the second stock we like is from the realty space, Godrej Properties. The stock has made a double bottom near to 1930 to 1880 odd levels and witnessing some amount of rebound. The realty space has not given such amount of gains compared to the other larger indices. We believe realty stocks looks attractive. So Godrej Properties looks interesting from current levels. You can initiate long with a stop of around 1995 for a target of 2350.
Okay, Vikas, thanks so much for joining us with your outlook and your stock-specific recommendations. On that note, we'll let you go. But time now to delve into the world of F&O and derivatives and tell you what levels that we are spotting when it comes to the derivatives diary. For the index futures trends for the April expiry, we're seeing long build up on Nifty as well as Nifty Bank. Not surprising, markets have been on a solid footing for a few sessions now. India Wix has also cooled off slightly, 15.2, so those levels also looking good. Almost a 2% drop coming in today's trade. In terms of active calls for the 24th April expiry, we're seeing some call writing at 24,200 and 24,300, and we don't have a resistance level in sight right now, which is a big positive for the market. On the flip side, in terms of active puts for the 24th April expiry, 24,100 and 24,000 is where we are seeing some put writing. So much like Vikas told us earlier, 24,000 is the support that we're looking at, and resistance anywhere above 24,300, 350 looking good for the market right now.
All right, so that's how the derivative diary is shaping up. But moving on to the news that on the banks that impacted the big banking names, and that was in focus on the back of this, the Reserve Bank of India has released the much anticipated final rules on computation of LCR, giving banks a breather as they are seen as less stringent than that was proposed earlier. The RBI has allowed banks to set aside a lower stock of liquid assets against deposits raised through digital channels in the event of a potential run on the banks. So let's go across to see what the implications of this are going to be on the banks, on the credit growth and the margins going forward. My colleague Gaurav is joining in with what the brokerages had to say about it. Over to you, Gaurav.
Absolutely a very big push for banks in terms of liquidity from RBI, because now RBI has finalized the LCR norms, which were much awaited norms. And first, let's understand what are the changes. First, that they have assigned additional runoff factor of 2.5% for any kind of deposits which are accumulated from internet and mobile banking. They have also said that government bonds will be valued after applying a haircut. But what is a big positive is that they have actually lowered the runoff factor for non-financial wholesale deposits from 100% to 40%. Now there is a 60% fall in this runoff factor, which can actually boost the LCR, because this will actually help the banks to reduce the denominator for LCR ratio. Now let's understand what is the benefit is going to be. First is that liquidity buffer is going to get reduced. Other is that there will be sufficient time for transition, because RBI has said that this will be applicable from 1st April of 2026. So definitely a very much time that banks are getting. And lastly, it will also boost the LCR ratio for the bank, which can actually boost the deposit growth as well as advances growth for the banks. We also have some brokerages. So first, let's talk about IIFL. What they are saying is that in fact they have actually pointed out some of the names in the likes of Federal Bank, RBL Bank, Kotak Mahindra Bank, HDFC Bank, who could actually see the benefit because of the high proportion of non-financial operations. In fact, when we talk about Investec, they are also very bullish about this move. What they are saying is that we may see an positive impact of net interest margin somewhere in the range of 3 basis points, and it can also boost sector's ROE almost by 20 basis points in FY27. In fact, RBI itself has said that it will actually give LCR a boost of 6 percentage points versus what the street was expecting earlier of 11 to 19 percentage point of negative impact from the draft norms that we had seen. We also have Macquarie, who said that this can actually improve the credit growth almost by 140 to 160 basis points. And lastly, we also have Morgan Stanley, who say that some of the benefits can also be seen in FY26. So definitely a very positive move in terms of liquidity for banks, and definitely on the back of this, we will be watching out on the entire sector in the day-to-day.
Okay, well, lots to watch out for when it comes to the entire banking and financial space. Thanks, Gaurav, for that. Let's talk about the FMCG pack that was up and away in today's trade on the back of a UBS note coming in, wherein they say that the sector is a Goldilocks in the making. It's poised for a rebound after a weak FY25, and earnings recovery is also seen in FY26, wherein they're already penciling in 13% growth. Also saying that margins will ease in the second half of FY26. This could boost EPS and overall the sector in turn. Now they're saying that rural demand already looks steady. The tax cuts announced in the budget could also provide a fillip for the sector. Lower food inflation will aid the sector along with the 8th pay commission over the next 2 to 3 years. Valuations are down 35% since October, and FMCG offers some defensiveness in a volatile market. They prefer DMart and Trent as income stimulus plays. They favor HUL and GCPL as turnaround stories as well. On the back of this, they've upgraded HUL, ITC, Trent and Colgate, maintained their rating on DMart, GCPL and Britannia, and downgraded on Marico, Asian Paints, Dabur, Jubilant Foodworks, wherein they've also cut the target price, except Marico, where they've downgraded the rating but hiked the target price.
All right, those were the consumption, the FMCG pack that was in focus today on the back of that note. But there are a couple of other names, UTI, AMC, Coal India, Interglobe Aviation, that were in focus today. But what's the news flow here? Let's go across to my colleague Rabinder, who's standing by with the details of that. Over to you, Rabinder.
Well, as UTI AMC is in focus, whereas as per UTI AMC has announced its integration with the ONDC in collaboration with Sibri, a leading financial technology solution provider. Moving to next, Coal India were also in focus, where Coal India has signed a MOU with Damodar Valley Corporation to set up 2x 800 megawatt ultra supercritical power plants in Jharkhand, and will be a brownfield project and expansion of existing Chandrapura thermal power station, and the investment will be the tune of rupees 16,500 crore. Moving to next, on back of brokerage note, Indigo were also in focus, where Kotak Security has come out with their note on Indigo, where they have maintained the buy rating with target price of rupees 6,100, where they say that the possible demand weakness and the shift of China-bound aircraft to Indian carriers may affect Indigo, but the impact is likely to be short-term and limited, and a drop in crude oil prices and the related savings remains positive for the Indigo. And lastly, Chola Investment and Financial Holding were also in focus on back of brokerage note, where CLSA had downgraded the stock to hold with target price of rupees 1600, where they say that the stock is trading at 4 times price to book FY27, which is just a 9% discount to Bajaj Finance, which is a market leader, and historically it has traded at such high valuation only when AUM growth is around 30 to 40%. They say that while Chola could benefit from a rate cut cycle, even at extra 25 basis point rate cut will be only improve NIM by 7 to 8 basis point.
All right, Rabinder, thanks for taking us through all of those stocks that were in the spotlight today. With that, we completely timed out on this edition of Your Trades. Thanks for watching.